Welcome into the Safeguard Podcast. I am Outnumbered.
Matt, can we please change the subject?
At Safeguard, we want to be versatile. We want to help in every way that we can and not just in one certain area or one certain product. We want to be holistic planners for you. A good agent or advisor should provide you good information regardless of whether they sell you something.
It is so frustrating that people are penalized for making a mistake when the government doesn't do anything to educate them.
Honestly, shouldn't it just be about helping people? Listen to this. 33% of men and 43% of women have no life insurance at all. That doesn't even count the people that don't have enough.
Insurance has the power to change people's lives.
You have got to be sure that you educate yourself before you make major decisions. Honestly, I couldn't imagine not being at Safeguard at this point. Again, to Outnumber the podcast, I'm Matt McKay.
And I'm Stephanie.
And we're excited to be back for episode number 11. We are well into the double digits now, and I'm very excited, and we're bringing a new series to you this week.
Yes, exciting.
It's April is Financial Literacy Month, and we're going to start a series on basic financial literacy. We want you to know some basics, not just pure insurance. Obviously that's a part of it, but that's not everything, right? So you need some background. Yeah. You need to know some basics of how it really works. I know when I got started in the business, I didn't know much about money in general at all.
I didn't know anything.
Bless my heart, she says.
Yes.
But that's what we'll be talking about today. It's just introducing the idea of financial literacy, tell you a little bit about our background. And then in the coming weeks, we're going to talk more specifically on certain aspects. I think we'll probably start with maybe some budgeting and some real basic concepts of things that we feel like everybody could use immediately. Whether you're 15 years old, you just got a job, or whether you're 85 years old trying to figure out how to make your money work in deep retirement. So that's what we're going to get into today. Stephanie, what are you thinking today?
Well, okay, so the whole purpose of this series is, we're going with the theme financial literacy, because it is Financial Literacy Month, and the whole reason for that is to teach people. And some of these concepts are not just common sense, just things that you come by in your life. Some of these concepts that we'll go over in the coming weeks are things that you have to either know somebody who knows this information, or you have to dig into it through resources like books or resources online, YouTube videos, podcasts, ebook type things, different series that you can look into. But some of this information is not just stuff that you luck into over your life and you're just going to automatically know. So we're going to basically address everything that could benefit any age range, like he was mentioning, from young kids. I got my first job when I was 15 years old, and I couldn't even get a bank account on my own. I had to have my dad help me get a bank account because I was so young. We're going to go all the way up into those people that are in the end years of their lives, that are trying to make sure that their money is going to be there when they need it to be there. And we're going to just anything that encompasses any of that. And even some people out there that listen might have young kids that they want to use some of these tips to put their kids in a better future financial situation, or they want to teach these principles to their kids, because like you were mentioning, you didn't really know some principles that we're going to cover. When we first got together, you were kind of
YOLOing it?
Yes, to say the least. And you had a checking account and you didn't even know how to access it. Or was it a savings account, right?
I had a savings account that had been locked out for a couple of years because I didn't know how to reset the password. Otherwise, I would have spent that $1,000 too.
Yeah. So basically, we're going to cover topics like budgeting. That's something that I have been doing since I'm 15 years old. I was raised budgeting from teeny tiny. and it's something I'm really good at and something I feel like I can bring some perspective to people who don't budget as far as why you should and different things like that. We'll discuss different things like what is compounding interest and how does it work and why do all of these financial professionals keep saying you need to get started as young as you can regarding investing. We're going to dive into why that makes such a difference, and we'll break down numbers and do a really deep dive and explain it in a way that anybody can understand it. We'll look at we're going to go over all of these different things. We're going to look at what is the rule of 72 and how does it work, and we're going to look at what is market volatility and what is a bull market versus a bear market, and what is our market doing right now, and what are the economists projecting it's going to do in the future, because there's a wide array of thoughts on what even the next 6 months of our market is going to be like. There are some people predicting we're going to have the worst recession we've ever had, and there are some people saying, we're going to be okay, it's all going to resolve itself. So we'll dig into that a little bit. That'll be several weeks down the road before we get to that one, but it will definitely be worth listening to. We're just going to go through we're going to talk about, we can cover how to get a savings and a checking account, how to start saving money. That's one thing. A lot of people want to save money, but they struggle because they don't have a budget in place, or they don't know what they can do, or even in some cases they're living past their means and they're spending more than they make. We'll talk about how to get out of debt, how to get out of credit card debt, how to avoid getting into credit card debt. That's all stuff that we can cover and kind of dig into. That all goes into financial literacy. Every bit of it is just learning how to use your money better and learning how to make your money work for you. We'll talk later on in the series about risk tolerance and different concepts that affect the stock market, and I want to do kind of a deep dive into how that whole stock market works, because I know a lot of people find it to be intimidating and nerve-wracking.
Yeah,
and
I was even thinking more simply, what's the purpose of the stock market? And things like that, because I think a lot of times, especially if you have, I have people that sit in my office and say, I have no clue about money. I don't know anything about insurance. I'm insurance ignorant, or I'm finance ignorant, or I don't know the first thing about what to do. And so I think this is something that we'll definitely cover for the people that have some expertise, but also we'll start with some of the basic building blocks of finance and make sure that you know some of the basics before we get too far into the depth as well.
Yeah, we're gonna crawl and then walk and then run.
I'll probably bring the simple stuff and then show them the complicated stuff.
Yeah.
That's just in correlation to basic brain power between us. But what I would say just for today is, why don't we talk a little bit about our own financial journey? Individually and then as a couple, as it kind of merged in. Because I think it helps to apply it to people that are financial professionals that are not perfect and haven't had perfect finances and still don't. But we're learning along with you, but we also, because we're in an industry that directly is affected by it, we've learned probably more in our younger years than a lot of people our age. And so, and really a lot of people, more than a lot of people learn in their entire lifetimes. So we want to bring some of that back to you and give you some of the experience. So I don't know if you want me to go first or you want to go first.
I think I'll go first.
Oh, okay.
I was going to let you go first, but I'm excited. So.
Okay, well, get it done.
Okay, so like I mentioned just a couple minutes ago, I grew up very financial minded, I was raised from a very young age to how to budget and why to budget and what the purpose for it was. I don't know why, but even as a young kid, I just kind of geek out over money and just I just actually told this story to my mom last week, and she was surprised. But I was telling her I used to, when she would write checks for me to get my lunch at school, because she had to pay for lunches, I would eat lunch the first day of the week, and then I would cash the rest of the check out and take the money and put it back into like a piggy bank type thing, before I had a checking account. And I would keep 4 days a week worth of the money that she was spending on my lunch. I just wouldn't eat lunch, and I would save that money because I wanted the money more than I wanted the lunch.
I didn't know that about you either.
My mom was a little surprised. I'm pretty sure my dad might have known that.
/ horrified, concerned about your health.
Well, I'm okay. I'm clearly okay. And so I was the kid that I got an allowance for my grades. I earned that money for my grades is how that worked. And then we would get like a small allowance for like doing certain chores and stuff. Basically, you wouldn't get an allowance for doing nothing. You earned that money because we were taught the value of work and how to earn money, and that you don't just get it for free. And basically, I remember when I was a little kid, like really little, like 4, 5, 6 years old, I would get like $1 in quarters or something like that. And I would go to the bank. I had a little kid bank account at this. It was a credit union that was local in our town. And I would just deposit like change, like 32 cents or whatever it was that week or that, for that time period. And I just felt like the biggest thing there was. Like I was the coolest kid there was. And I had like tiny little bits of shit. And looking back at it now, I realize like it really was just tiny little bits of money. But to me at the time, it was this huge thing. And I was doing this very grown up process of putting my own money into my own bank account. And I was the kid that, if we went somewhere and we wanted to buy something that wasn't like, normal house stuff that you need, or if we wanted to buy extra toys or junk that my parents didn't think we really needed, they would say, you have your own money. If you want it, you can buy it. And I remember one time I went into a store, it was an office supply store, and I bought like this pack of gel pens, and gel pens were all the thing in the like late 90s, like when I was 9, 10 years old. That was like the thing for girls. Like gel pens were so cool. Any 90s girl knows what I'm talking about. And I remember going in and I bought this pack of pens with my own money. And by the time I got outside, I was so unsure of spending my money. By the time I got outside, I was just sobbing because I was so upset that I spent my own money and bought these pens that I actually went back inside and returned them because I wanted to have the money, because it stressed me out so much to spend this money. So ever since a young age, my brain has been financially geared towards saving. I'm a natural saver. And that's just, I was taught a lot of financial principles from a very, very like child age, and just understood things about money that even some adults might not even know now. And that's just kind of how I've lived. Like I'm very, very, I'm not greedy with money. That's not, but I am very, just aware of money.
Frugal? Is that what you're looking for?
No, I mean maybe, and some I'm not cheap. There's a difference. But I'm not just like an overt like spend all my money and have nothing left. There's a balance there, and we'll talk about that later. But as I've gotten older, I got my first checking account. Like I was saying, at 15, my dad had to sign for me. I got my first job. I thought I was the coolest thing in high school, making $6 an hour. I'm working minimum wage at a gas station, and I worked there for 6 years. And I put back a lot of money in high school. By the time I graduated high school, I was working 3 jobs, not because I had to, just because I wanted to. I like to have something to do, and I like to earn money. And like I mentioned, I'm not a big spender, so I would save the large majority of my money. Outside of paying for gas and my car insurance, I really had no expenses. I was living at home with my parents, ate with them, lived with them, so I didn't have rent or anything like that. And I had basically saved up a little over $20,000 by the time I was 18. So at that time, me and I had mentioned before, my first husband, Ryan, we decided to buy a house together. And I used that money as basically a down payment to get a house and to fully furnish a house at 18 years old. And I remember the people at the bank being so astonished because I was so young. They didn't think that I had earned that money on my own. They thought I had been given that money by somebody. And I had to keep proving, I had to do so much more documentation that most people have to do, because they basically didn't think that I was financially dependent or independent enough, even though I had made all this money. They thought somebody had just gifted it to me. So I had to prove that I had actually earned it on my own merit through my jobs. I had to give like an obscene amount of tax paperwork and like just documentation. It was just a lot of stuff. And really was doing pretty well in that situation until Ryan passed away, which I've talked about that in another episode, about how basically that put me into a financial situation because he didn't have enough life insurance, and there was a shortcoming there between what my expenses were and what I had in the bank, what I was earning from my job, because I was in college at the time. And that really started a sort of downward trajectory of expenses versus income for multiple years. And honestly, to this day, I still feel the pinch of that, trying to overcome some deficits that I incurred through my, early 20s, as I went through that situation. I do have regret there, but I didn't know some of these concepts and stuff like that, or I was kind of told some wrong information. And I have learned now and corrected every situation that I have experienced. And that's part of why we're here today, to keep other people from making some of the mistakes that we've lived through. So that's kind of mine.
And when you're faced with that in your early 20s, it's not like you absolutely should know.
Yeah.
You should have looked at life insurance because you needed to make sure to prevent against early death. I mean, that's insane at 21 to have to try to fathom that and have things in place by that point.
Yeah.
But that is what you needed if it could have happened. So it's obviously not. It's not on you, but again, that's the purpose of it. It doesn't matter what age you are. At some point, something's going to happen, and you can have all the money in the world, and if the wrong thing happens that affects your money, then all of that can be wiped away. Because Stephanie, kind of bringing in my perspective, she had saved a lot of money and still had a lot of money in the bank account after buying that house, and then they had a good amount of savings and everything. But still, if you're operating at a deficit at some point, eventually, it doesn't matter how much you've saved up, you'll eventually run out of it unless you start making more money or reduce your bills somehow.
And I was working the kind of job that I didn't have a whole lot of growth potential to just increase my income.
And so those are some of the things that we're going to talk about in terms of being in deficit and trying to cut expenses and everything, and we're all trying to do that all the time, I think.
Yeah.
Finding ways to save money or make more money. And so to kind of back up and tell my side of the story, my side of the story is a little different in terms of, like I actually have a family that is in the business of insurance and finance and all that. A lot of teachers and a lot of education and all that kind of stuff. So you would think that I have this deep lay knowledge of everything finance. I have a dad that has been in the business. I have a granddad that's been in insurance for 57 years in March and all this. So you would think that I have this deep, connection to money or whatever. But honestly, and this is not a shot at my parents at all. They just like they did the Dave Ramsey thing, financial peace at church, and we talked about some savings and stuff like that, and having a $1,000 savings and that kind of stuff, and tithing and giving and having balance and putting stuff in savings. Like I had a basic idea of what you're supposed to do, but I definitely didn't have like a specific system. Every once in a while we would get some kind of allowance or whatever, but we didn't have anything where we were taught about specifically saving and learning the value of burning money now versus having it later.
Yeah.
And so to me, as I was getting older and everything and starting to have jobs and stuff, it was a little different situation. I didn't have as much need. I wasn't necessarily forced to, take care of, like I had a car and I had to pay for the gas and stuff like that. But I basically was able to have jobs, and then mom and dad would help me. I had some other stuff that I was doing. I was involved in, at one point I was involved in WKU football, which actually that's where the shirt came from. Go Tops, big news, Dante Allen, coming to WKU basketball. Anyway, that has nothing to do with money, but but anyway, I was preoccupied with that and probably a little spoiled in that regard of kind of having some things and just having to take care of a few things. And so I had some jobs and I worked hard. I worked when I was with football. I worked 6 days a week with football, and then the 7th day I worked at Minute Mart at a gas station, and worked the closing shift. And then sometimes in the spring I'd have to wake up 2 hours later and get up to go to football and all that. So I worked really hard, and made some income. I didn't have a great income or anything, but I didn't have a ton of expenses. I just had to pay for my apartment and my gas and some of the real basic stuff, all the way through college. And so my friends would call me money bags because I would pay for their meals and stuff and things like that. Like people thought I was rich or something. I don't know if I thought I was rich, but I just had extra money. I was like, oh, people were struggling. They talk about how they don't have any money or whatever. And I've got money. Let me spend it on them. And so I just spent it. Well, 2 months later, when I spent $60 on friends at the Olive Garden or something, or wherever we went, and overtime, or wherever the heck we were going, Subway, it doesn't matter where we went, just spent a bunch of money. Well, then with my minimal income, I was spending too much money, and I'd have to put stuff on the credit card, or I'd be like, hey mama, how you doing? It's good to see you. You look very beautiful today. Can I get some money? Because I'm broke and I can't pay rent or whatever. And so that was something that I hadn't really learned how to measure all that and take care of things. And so long story short, when I kind of started moving towards possibly doing insurance or something as a career, I shadowed my granddad, went for a class in college and got exposed to some ideas in finance. And then I graduated from Western and I was working at Meyer and College Suites, so not making that much money. It was a apartment complex and a grocery store is where I was working. So wasn't making that much money. Got involved in insurance, and that was when Stephanie and I started talking again and dating, and then ended up getting married. Well, as I get more exposed to how Stephanie runs her finances, and I'm like, whoa. Because I mentioned that I was locked out of a bank account. That is 100% true.
Yes, it is.
I locked myself out of my passcode one day, and so the only way that I knew how much money was in my account was when I would deposit something or I would go try to withdraw something at the ATM. And so I would find out how much money I had when I pulled something out or deposited a check from work or something like that. And so anyway, it was foolishness. And then I didn't know how to get into my savings account, or I probably would have spent that $1,000 that my parents had set aside for me years ago. But it was a good thing I didn't know how to get into it. So I brought $1,000 into and $1,001 into our relationship, I guess. But being exposed to how regimented she was with her money, and she had a budget and she had all this stuff. I never had all that. And of course I know, it's a good idea to have a budget. And if you think about where your money's going and stuff, that's cool. And, I'm glad it works out for some people. But it wasn't something on the forefront of my mind at all. And so Stephanie comes in and brings, several months worth of savings into our relationship, and I bring about nothing. But a good thing I was good looking and less fat at the time. And I could use an axe and a saw and a lawnmower and not set it on fire.
Oh goodness, that's a whole different story.
Anyway, so whatever. But I brought some skills, but not in finance. No. And so as we have gotten into this and into insurance and finance, you learn more about, man, this stuff is important. And also you see all these stories, good and bad, of people protecting themselves versus not, which I think we would be experts in terms of the risk management and preventing bad things from happening, or at least not necessarily preventing bad things from happening, but preventing horrible things happening to your finances.
Yeah. We've seen a lot of situations that clients have been through, and I don't know how many times I've been told by somebody, I thought I had that taken care of.
Yeah.
And I didn't. And I've learned from other people's mistakes, really, what I don't want to do in my finances as I age and get older. And I just think that it's been immeasurable to have the experience that we've had and seen as many different people in their situation as we have, because it does teach you a lot, and it helps us learn how to protect our own situation. It helps us learn how to protect other people as well. So it's a lot of experience coming into what we're going to talk about in the upcoming weeks.
Yeah, absolutely. And so that's the life experience always shapes us. We both have stories, and we both have different approaches to how we've ended up here. And as a married couple, we've dealt with our own concerns and trying to figure out how to make things work with kids, and overspending and over obligating ourselves. We've done that, been there, done that. Credit cards and making certain decisions even with our insurance that we probably should have done something else with or considered here and there. And so we're going to open that up to you in terms of some of the things that we've learned, but also giving you some of the basics that maybe you've never been taught.
Yep.
And so that's the idea behind this specific series, is just working on giving you a little bit of background, so that you know what you're looking at when you get a statement in the mail, or you get when you think about how can I possibly save money or whatever, I would just encourage everybody. We're going to talk about this next week, but a budget. Create a budget. Look at what you spend in and out, and be honest with yourself. Consider some of these basic things. What am I really spending my money on? What if I had to? What could I pinch off? Am I spending more than I make? Because so many people that I talk to, I say, do you have some kind of budget, or you just kind of make it work? And almost everybody, I mean, less than 5% probably say that they just make it work.
I'm gonna look at how many people have a budget, and I'm gonna talk about that next week.
Yeah,
Telling you for sure how many people have a budget.
We're gonna get deep into budgets and things like that, and just basic money concepts, because there are a few things that we've done that really help us. There are a few things that we've done that probably could have been done better. But regardless, it's a really important part of money. If you make, just to tease you a little bit with the budget talk, we were talking about this earlier at lunch, if you make $10 million a year, but you spend $10.1 million, you're making less money than someone who makes $30,000 and saves $1,000 a year. Okay? Because you're going negative regardless. So it's not necessarily about how much money you make, it's about how much money you spend versus what you make.
Yeah.
And so we just want to get into that. Were you going to say something?
I was going to say,
like there was something
there. As a bonus for people who listen next week, I will include a copy of a budget sheet that they can print out from your own home and utilize to go ahead and create your own budget. And I will give instructions next week on how to get access to that.
Cool. That sounds fun. So, budgets, yay. But seriously, it's really liberating when you look at your money and you're like, we spend $400 extra a month on eating out.
Yeah, that was our big one.
Yeah, and we're educated in finance and everything, but we get busy and you make the decision, whatever, it's no big deal. And then you look back and you're spending way over your budget, or what you think you spend, because you spend a little extra. You get an extra dessert, or you get an appetizer, or whatever. All those little things add up. And so, the coffee, a lot of people go to Starbucks or something like that. We all have little things that we spend money on. Well, if you're tight on money, start thinking about those things, and we'll start looking at little details that we can help point you in the right direction. And so that's what financial literacy is about.
Yeah.
We're not calling you ignorant, but we want to make sure that you know what's out there and how some things work, because we've had some issues with our own ignorance, straight up ignorance on some things. And you look back and I think there's plenty of things that we've done that we're like, man, why did we do that? Yeah. So we'll talk about that. But we're really excited about this series. I think it's a great idea. Stephanie had it, and I think we should just roll with it for a while, because there's so much that we could unpack related to just simple finance thoughts that don't even have anything to do with insurance, but they're super important. And if you don't have the foundation of taking care of your money, it doesn't matter most of the other things that you do in your life related to your money if you don't basically take care of it.
Yeah, exactly.
So, any other final thoughts, Stephanie? Any teasers or
nope? I'm gonna save it all.
BOGOs or
BOGOs. I'm gonna save it all for next week.
All right. Well, hey guys, we appreciate you. We love you. Thank you for following and liking and subscribing all of our pages at Safeguard KY or Safeguard KYINS. Check us out, YouTube, podcast of all kinds, platforms and everything. Check us out. Tell your friends about us. I guess tell us about your friends if they need insurance or need some kind of advice. We're happy to help. And just know we're here for you. Take care and God bless.
See you next time.
Bye.